By being nimble, do you mean sell some positions, keep bigger cash position? What about pure gold, MPI? Keep those despite losses or just ride it out? From GGR.
Okay, so clearly these are the difficult parts of trading. um, Remember, as a trader, I accept the ability to take losses, right? So I know you don't want to hear that, but if I can cut a loss at a small amount and prevent it from being a big one, I will do so, right? To me, that is temporary, because with the money that I get to be able to save and reinvest later at a more opportunistic time for better profit, I can easily make back those losses. Unlike I stay into a losing stock that's going down and I have no way of knowing what the next low is going to be and how far it will go down. And I don't know whether the business is actually becoming worse or better, especially in times like that, then it should be easy enough for me to be able to let loose of it. Now, again, the thresholds are important. Like I told you earlier, I mean, if you're losing money, but it's still over your 100 or 200-day moving averages, and maybe you can still try to hold on. Now, if you're a longer-term investor and you feel so solid about the name of the company that you've invested in, so much so that you think the growth prospects, et cetera, are still very much in line, then go ahead and hang on to your stock. Because it doesn't seem that technical analysis is what you're using to air judgment in your company. Because if it were, the minute you see MACD cross downs, breaks in moving averages, breaks in trend lines, or if you get topping out patterns, you would have already taken that out. So if you think that the prospects of the company is there, then go ahead and hang on to it. My philosophy is very simple. If I use technical analysis to get me into a trade, it will be technical analysis that will get me out. If I use fundamental analysis to make me buy a stock, it should be fundamental analysis that will get me out, right? That way, I don't flip-flop on which boss I'm going to be looking at, because sometimes that could be very difficult. Imagine if you like the story in a company and you buy it because the storyline is good, but now your 200-day moving averages starts to break and support starts to break. Now you have a conflict. One guy telling you to sell, one guy telling you, why are you crazy? It's getting cheaper. Why will you sell? Right? And so you have to learn how to be able to know who are you going to listen to and when are you going to listen to. And that's why you have to know which boss to listen to first.